And we're live, everybody. Welcome back to Strongman Personal Finance. It's actually, Tuesday night, and I'm doing a live stream. And that's because I have some very special guests on today that emailed me a while back, and then their email ended up in my junk folder, and then I found it like way later. But these are two guys, Fabio and Austin. Welcome to the channel. Please introduce yourselves. Tell us who you are. Tell us about your YouTube channel, your blog, whatever else you have, and then we'll start talking about some interesting things.
All right, so I guess I'll go first. My name is Fabio. It's obviously there. And so right now I work at a boutique company that basically takes its business profits that are excess of working capital, and we reinvest it into a variety of different investments, whether it be real estate, equities. There's no jurisdiction we don't really pay attention to. We kind of are more global. I can get into that later. And then what we did is we started this channel, Capital Mindset, with the focus of providing free educational content to anyone who really wanted it, kind of leveraging my experience, Austin's experience, both our education and work experience, and kind of just throwing that out there for free, no paywall, no ad wall, nothing, just there. And Austin can talk a little bit about himself now.
Yeah, so my name is Austin. I have some experience in the accounting industry. I did a tax internship, and now I'm back in school at the moment, finishing up my last remaining classes before I have the educational requirements to take my CPA exam, which I plan on sitting for in the spring. At the moment, I am running like a music side hustle, which is kind of like my own business where I book myself at various different venues, and anything that really provides me, I invest into the market itself. So yeah, basically to kind of parrot what Fabio said, we really started this channel because we saw this huge wave of misinformation on YouTube especially, and we kind of wanted to combat that while like offering like really good quality information at like free costs with like no paywalls or anything like that. So yeah.
Yeah, I mean, one of the beauties of YouTube is you can literally provide free content, and your viewers pay for it by watching ads if they choose to. So it's like one of the best. Exactly. It's basically a win-win for everybody. You get to make money eventually, and the viewers get to learn some good stuff. Now, did you guys like know each other from school, or you just find each other on the internet, or like how'd you guys meet?
Well, we actually go way back.
This is a long topic here, Chris. So
I want the first day you met, what the weather was like.
Yeah, right. So we initially met in high school. We played on the same soccer team together, and then we kind of stopped talking. And then right during last year, we kind of like hit it off again because we had similar classes, and just that's really kind of the way that like we got to where we are now. So.
Yeah. Cool. Well, I'm glad you guys started working together because obviously I enjoy your YouTube channel. So it's called what?
Capital Mindset. Yeah. And then we have a website, capitalmindset.org, where we post articles as frequently as we can.
Yeah. So if you're watching, everybody, go check out Capital Mindset. I don't mind these guys unless they start pumping penny stocks, and then I'll diss them forever. But they seem to have a pretty good YouTube channel. And, I think both of you write articles on your blog, don't you?
Yeah.
Mm-hmm. Yeah. So they write some interesting stuff. I know one of you isn't a fan of Bob, or maybe even both of you, and that kind of hurts my feelings, but I understand.
We can talk about that. Yeah.
Oh, yeah. We'll definitely talk about that. We'll have a, friendly debate. But yeah. So I heard you guys wanted to talk a little bit about a tattooed chef. Can you tell me a little bit about that?
All right, so I'll let Austin go first, and then in anything he doesn't really cover, I'll supplement that.
Yeah, so kind of just looking at tattooed chef, just me personally, I don't really entirely see really exactly the whole hype behind this stock, and primarily like the number one risk factor that I kind of see with this stock is right on their cost of goods sold, because they get most of their products from Italy and Brazil. And like you actually put in one of your videos, actually, it was funny enough, it was the first video we ever watched of you where you were trying the tattooed chef. I think it was, what was it, the cauliflower bowl, something like that?
It was like the burrito bowl or something like that. But I also did try the cauliflower bowl. That was pretty bad too. That was pretty bad.
Yeah,
too.
And so I just, me personally, I don't really entirely get really the hype with this stock. And me and Fabio a little bit earlier today, and I'll kind of let Fabio go into this more because he really did the legwork on this. We kind of started going into their cost of goods sold and their operating expenses due to like or relative to their sales increase. And we kind of saw something that kind of like was kind of a red flag to us that maybe showed that there wasn't exactly scalability. Now, this is, like they haven't really been public for very long. So we kind of need to like take that with a grain of salt. But that was just kind of our like initial what we had seen with it. So.
Well, Austin, you're being quite polite there with the way you're saying it. Off camera, you're a little.
I'm very, very diplomatic, Fabio.
Well, guys, all that matters is that the food's not good. Okay, it doesn't matter about the fundamentals, right?
No.
Yeah.
I mean,
or the fundamentals. We can talk about the fundamentals.
Like his beef with everything money, and but yeah, basically he touched upon it pretty well. Like when you're looking just at the performance of the business, I don't know what it is that I mean, I get what he's doing. He's kind of just like pumping a stock. Well, maybe, allegedly, might be.
Yeah. This is just our opinion.
And when I just take a look at the just like the performance thus far, granted thus far, I don't really see the business scaling. I see that their sales are growing. Sven Carlin talked about this a little bit. They're basically selling the product at cost. And I think you, Chris, you were talking about it. You were saying, well, this is a ripoff, right? It's pretty expensive.
I approached it from both angles. I mean, obviously I looked at the financials, but if you really think about it, I mean, if you're like you're a vegan, just because you're a vegan doesn't mean you're an idiot and you're just going to go buy, a highly priced vegan product in the frozen food section of Walmart or even Target. Like you get a tiny little portion that has 300 calories, and even a soy boy, which I like to harp on all the time, even a soy boy needs some calories, but 300 calories and it's $5. To me, that's a little ridiculous. Even my wife, who's a small person, that portion would not have filled her up. So to me, it's just a ridiculous concept to begin with.
Yeah, no, I completely agree.
Yeah, and that's kind of the thing that's really so surprising to me, because I like to read a lot of Howard Marks. I like to quote a lot of Howard Marks whenever me and Fabio talk. And he talks specifically about these sort of like silver bullets that kind of happen in the market where like people create almost like this blind devotion to a particular ideology. In this case, the ideology would be, in my personal opinion, TTCF. And it's almost like I've seen people like vehemently defending this stock before. And I'm like, why? Like, what do you see here that like warrants this level of just ferocity and intensity and just like loyalty? To me, it just looks like any other stock that's just like, not really going to go anywhere. So that's just my opinion on it,
Well, the reason people are so ferocious is probably because they have so much money invested in the stock. That's why they've almost wrapped their entire financial future around, if I buy this stock, like, maybe they're in desperate financial straits or they're not doing too well, or maybe they're unsuccessful, and they invest a lot of money in this one stock because some YouTuber told them to. And they kind of see it as like their ticket out of, mediocrity or poverty. And that's why they're so wrapped up in it. At least that's my suspicion for the vast majority of these guys that really get offended when you make fun of Tattooed Chef.
They get so offended. It's crazy. Yeah. They get so offended when you make fun of it. I'm like, what the heck? Like, especially like the videos that you put out where like, you're just being like honestly realistic with the company as a whole. And like, they get like mass downvotes. And I'm like, man, like these people are like, like it's just crazy to me, So
I think the Everything Money video about Tattooed Nutsack is their most downvoted video thus far, I think.
Yeah.
I mean, it's everywhere. You go on Seeking Alpha, for example, you go down to the comment section on any Tattooed Chef articles, and there's people just like, if you say anything negative, it's you don't understand the fundamentals, you don't understand the business. They'll point out Target. I think literally all of them have watched Jeremy. It's they just quote him, they just parrot him, everything he says. They got Target. This best. We hear that all the time. Actually, we hear that from a mutual person that we know, Austin and I. They quote the exact same thing. They say, Target, and we're like, I wonder where you heard that one from. So
yeah.
And another big issue with that company is they're highly concentrated in like 3 different stores. So if even one of those stores drops them, they're going to lose probably a third of their revenue, which would basically annihilate the company. So there's just so many risks. Like, they're not profitable. Their gross, so I just checked on Morningstar, their gross margins are going down. basically every freaking year. And if one store drops them, that's it. I mean, I just don't see why it's worth it to put so much freaking money, into one stock when instead you could buy, well, there's plenty of other good stocks you could buy, or you could just buy an index, which I like to promote.
Yeah, no, for sure. And another thing is, like, when you take a look at any kind of investment, you can kind of look at the micro, and then you also kind of take a look at the macro and how you're positioning yourself. Well, for example, I'm not going to make a definitive statement here right now whether or not we'll see a lot of inflation or deflation. There's the two sides of the two arguments. But for example, if you're putting so much of your hard-earned cash into something like this, you're not really getting something that's an inflation hedge. Sure, they have like branding power, but you can't really argue that is enough to then hedge off the costs associated with producing the end product faster than what they can end charging the end consumer. I think that, for example, if you're putting 50% of your portfolio, which we know that some people have, there's a YouTuber who is started pumping this, who says he's put 40 or something percent.
40,
you're
Fabio,
taking on
40%. 40%
exactly.
of this portfolio is in TCF.
Exactly.
Who is this?
It was a comment. Yeah, it was a comment that I saw on one of Jeremy's Ttcf videos, and like it was like, his name, like fundamental investing, and then like his like portfolio was like, oh, I'm never listening to the naysayers. Like, I have 40% of like my entire portfolio in Ttcf, and I was like, dude, like, what are you doing? Like, oh my goodness.
Yeah, I mean, I know Jeremy has like over $1 million, especially when you factor in calls and stuff like that. But I know it's not him. I know he doesn't have 40%. I'll be interested to see who that is, and actually, maybe investigate their channel a little bit and see how they're doing. Maybe make a little.
I could probably find him. Being honest with you, I could probably find that channel.
Yeah, I mean, if you're a big channel,
the comments on there. Yeah, the comments on the video. So
yeah, if it's just some random clown that has like one subscriber, whatever. But
yeah,
it's always fun to go after the big boys because I just love to expose how freaking stupid they are.
Yeah.
So another thing that I've noticed, Jeremy, maybe it's not all the time, but he seems to target stocks that are heavily shorted. So I'm looking on Morningstar. I don't know how accurate this information is, but it says 31% of the float is currently short for Tattooed Chef. So I think part of his game is that he's hoping that Wall Street Bets picks up on these stocks and he gets a temporary, buying frenzy or short squeeze, and then he can claim he's a genius and then cash out. So that's maybe what he's trying to do as well. A suspicion.
Yeah, this form of investing has gotten hot again. The short squeeze. It was a play back in the olden times, not that long ago, but it seems to be in vogue again. I mean, and there's legitimate reasons for it, but people are kind of abusing it. Actually, there was one company. Wow, I forget the name. That it was actually getting traction on Reddit and YouTube by these hype investors. And when I looked into it, I think it was, again, one of our mutual friends who brought it to me, and I showed him the fuller picture. What was happening was they were merging with another business, and then it said that the percent short was 100%. But that's entirely misleading, because when they were combining with this new company that was already private, the short float was only 8%. So people really don't know these little nuances, and they just throw money at it, just thinking something is that easy. Just, oh, it's high short interest, therefore if we just like throw a bunch of money at it, we'll make a lot of money. So it's getting dangerous again for the retail investor, I think.
Yeah, it's definitely annoyed me, but I try to make videos about it. And of course, all you do is get hate, which is fine with me. It doesn't really bother. I actually think it's entertaining when I get a bunch of haters, but nobody's going to listen to people like us until there's actually a huge freaking correction, whatever you want to call it. And all these stocks, fall significantly. So you just, if you want to try to change people's minds or help people out, you're just going to have to be patient. I mean, keep pumping out videos, doing what you got to do, but a lot of people are not going to listen until something drastic happens.
Yeah. I was even contemplating with Austin a little bit, just like, oh, maybe because we're trying to show people like the right way, but we're always debating whether or not the way we should do things and what kind of audience it will attract. For example, like, oh, showing my portfolio size, And somehow people like to use that. Like, it's not technically the same, but it's like argument from authority. It's a logical fallacy. Just because someone has a large portfolio doesn't mean they actually know what they're doing. But we were contemplating that, and we don't know what kind of people that will attract. But then we say, oh, well, maybe we're going to attract those kinds of people. Maybe we can change them. We can help them out. We can say, no. Okay, you came here for this. Now take that out of your mind and now focus on bettering yourself as an investor. Don't follow hype, for lack of a better term, bullcrap. Be careful with who you listen to, and actually just think for yourself. Don't just follow what other people do. Learn, as Everything Money says, because I kind of agree with them. It's, you got to learn a process that works for you, right? And that's how I kind of see it. And a lot of people, for the grand majority of people, that's index funds. Exactly that. That's index funds. Like, when I say grand majority, I mean like the grand majority of people should not be listening to anyone just passively investing in index funds, in tax advantage accounts, or if, for some reason you don't have or can't or whatever, in a different country, whatever status you're in, just index funds.
That's because index funds, I mean, like I'm huge on them. Even like, I mean, I'm a CPA. I've been investing for 10 years. I should be able to pick a bunch of individual stocks. And I made some like small, fun speculative investments. But in my opinion, I think even me, I would probably underperform the index in the long run after you factor in transaction fees, trading in and out of stocks and taxes. Because all that stuff, even if you beat the market, like let's say you get 12%, the market gets 10. Well, if you sell a stock and you pay even a long-term capital gain, you might actually underperform the market, which is why I'm 95% index funds, and I always will be total world. And then I have 5% where I can kind of play around and basically enjoy myself.
Yeah. And then I know it's in that 12%. We'll talk about later.
And like also too, I think it's prudent to note that like a lot of people tend to get caught up in like the bull market hype, where like their friends are making money, their family's making money, and they're like, oh sweet, like I can just put my money into this and then make money too. And they look for I honestly think a lot of these people go to YouTube first and foremost before even having like a grasp of what an income statement might be, for example. And they see like these absolute big guys, and then these like huge YouTube channels are like promoting all these different stocks like Arcimoto and all these different things. And these people who like, I know.
I'm sorry.
But they're promoting like all these like different stocks, and people who don't really have like even a fundamental grasp of the markets themselves are like, okay, sweet. Like I'm seeing my friends make money, time for me to make money. And I think that that's dangerous. And that's kind of where like we come in at Capital Mindset, you at Strongman Personal Finance. We're kind of trying to like really instill like, no, like these people are going to lead you down a wrong path. Like you have to make sure that, like Fabio, you have to find a way that works for you. And then also too, a part of that is also finding ways that you can learn what you need to learn at the cheapest cost to you. Like don't ever pay 20 grand for like a stock picking course. Like that's ludicrous. That's stupid. It's so
you may think that's insane, but that was a real quote that I received calling a certain individual's course. Now, apparently, my other buddy Jay called them recently, and they quoted him much lower. So I'm guessing they've slashed their prices a little bit, but I was quoted up to 20 grand. And I think when Jay called maybe a couple months ago, I think they even got up to 24 grand, which is freaking insanity. Because if you think about your total return, if you invest or if you pay $24,000, you have to make that back up with whatever money you have left over, which is a huge obstacle to overcome. So,
yeah.
So wait, you're telling me if I give Jeremy 24 grand, I won't make 74% a year? Is that what you're telling me?
Stop.
It's like, hey, do you want to max your 401k?
No.
$500? Or do you want to give this specific individual that same amount of money so you can go on a Discord and learn about Tesla stock or whatever?
Yeah, wasn't he under investigation by some agency too for specifically doing these sorts of things as well? Didn't that happen?
So, there's nothing substantiated. Like I saw a YouTube video where he's basically somebody recorded him in his private chat and he's talking, oh, I'm under investigation, blah, 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 blah. And I basically, of course, use that to make my own video, but I can't really say who was investigating him, what happened, but it was probably the Securities and Exchange Commission. I'm hoping that would be nice. I'm surprised he didn't crack down on. I just feel like if you're a registered investment advisor, I mean, I'm not I don't know all the rules. I'm not a lawyer, securities lawyer, but I feel like he's providing investment advice for a fee. That shouldn't be legal. That should incur some kind of penalty. If he's not registered. I don't know, but that's kind of my suspicion.
Yeah, if there's anything about like government agencies that I've kind of come to realize is that they're basically sleeping bears. Like if you poke the bear enough, then it wakes up and then it takes action. But if not enough people are poking, then it's just not going to do anything. But something that I actually found interesting too, because I also kind of went through Jeremy's website and I signed up to do a call, which I didn't end up showing up to because I slept in through it, admittedly. They kept texting me and they kept calling my phone leading up to the call too, where they were trying to ask me for my income. They wanted me to confirm my income. So this is just my opinion here, but if they're quoting different prices, as you just said, that might kind of factor into it as well. Like depending on your income, they're probably like, okay, cool. If this person's making this, they can most likely pay more. So that's just my personal opinion on this, but that's why else would they be asking me for my income, so.
Yeah, I'm trying to remember if you had to submit, like maybe you had to submit your net worth and your income on the application. I don't remember, but you might be right. It just depends on what you tell them you have would maybe determine what they charge. So maybe they are still charging 20 grand. I don't know.
Yeah,
it's possible.
And he's always trying to recruit these salespeople, from what I understand. So he promises the people who work for him are going to make like a certain amount. The way he advertises it. I think, did you make a video on that?
Yeah. So what happened was, like, obviously I'm on his freaking distribution list because I called in. I should probably block it, but he sent out an email where he was like, well, actually, no, then I wouldn't get more material. He sent out an email where it was like, oh, you can make between, I don't know, 3 to 6 grand or 9 grand a month, just by working 20 hours a week. And it's like, if that's the case, if you have no like legitimate skill set and you're just doing whatever the heck he wants you to do, and you're able to pull in between 3 and 9 G's a month working 20 hours, that seems really fishy and scammy to me. I mean, it could be just a hyperbolic advertisement, but if his people are making even close to that amount of money working little hours, they must be massively ripping off the people that they're charging for their amazing services.
Yeah. No, that's frankly incredible. And do you guys want to, Austin, do you want to talk about the one that he promoted? The one?
Okay. Yeah. So
yeah, if you guys want to, you can. I mean, I'll let you guys take the lead on that one.
Okay. So I think it was back in February. He put out a video like top growth stocks under $10, and it was the first stock there. And I actually initially approached Fabio, and I was like, "Oh, Fabio, this stock's incredible. It owns Johnny Rockets, all this other kind of stuff." And this is when like me and Fabio were just like starting to talk again after high school.
Let me get some backstory. So I've been in the industry for a longer time and substantial, and I've been working and always doing research on businesses. And then Austin, with the accounting background, he's got a brain for auditing. So you're going to see that in a second when he gets into it. But so he comes to me with this company that he overhears. And what did I say about it, Austin? Initially.
Yeah, you're not really very happy because we plugged it into your discounted cash flow model and it looked terrible. And so what I actually found interesting was I started to do some digging on the CEO. And it turns out that in 2004, he went to prison for filing a false tax return. And then what happened was the SEC sanctioned his capital group for continuing to pay his salary and giving him a bonus while he was still in prison. So then me and Fabio decided to do some more digging. And what I end up finding is that same capital group was then acquired by Johnny Rockets. And we see a really, really high amount in loss on extinguishment of debt. And we were like, okay, that's, a little bit. And then we go to the balance sheet and we see an incredibly high amount of debt. We see an incredibly high amount of interest expense as well. And then what we also notice is they're still paying a dividend, Chris. This company's still paying a dividend despite being like cash flow negative in their operating activities, like everything. It was wild. And then we decide to look at kind of like their insider holding, and we find out that 75% of the company is owned by insiders. And guess who the number one shareholder here is, Chris?
I wonder.
Yeah, it's
CEO?
literally no, it's his capital group that he just acquired is the number one shareholder. Yeah.
So when you say like, okay, so number one, what is the dividend yield? Is it like a tiny dividend, like 3, 4, 5%? Like, what is it? How much are they paying out in dividends?
7 million in total. Let me give you the yield now because the price does change. So I'll give you the dividend yield. Dividend yield as a function of price, share price is 3.46%. So there's a couple, like, if I can explain that in maybe an easier to understand way for those who might not have caught on. It's essentially I own a business. So I own a business, and then I have another business that goes public. All right. So they're two separate businesses. My public business, I'll call it Business Fabio. And then the other business, I'll call it Austin. So the business that I took public, I have access to different forms of raising capital, and that's the purpose of going public. I am indebting this business with the purpose of acquiring these new businesses, and I'm selling it to shareholders like, hey, look at me. I'm growing. I'm buying all these new different restaurants. And then what I do is I also take on some debt in that business and I buy my other business. So now who got all that money that bought my other business? Well, I did. I enriched myself. I got a nice payday. And who's to say what the terms were? Was it a fair price? How did we get to that? There's a lot of questions that just brings up, aside from the fact that I bought the business that I own. I own that business, and I'm also the number one shareholder of this business, and you are the gullible retail investor who bought shares of this business thinking it's a great thing because you heard about it on some YouTube channel or something. And what makes matters worse is, since I own 75%, guess what the short float is? And if you guessed, whoever's watching, that the short interest is below 1%, you are absolutely right, because you cannot find shares to float because the one guy owns all of them. So no broker is going to be giving you shares to float. So you can't really bet against me too. And any kind of capital that comes in, what happens, Austin? If you get a
No. I just didn't want to distract you from what you were saying, Fabio. But I wanted to note too that he's also not diluting himself either when he's.
Oh yeah. Well, because if I did that, I'd be issuing new shares out there that could potentially create a nice big short position. So it's to my interest to keep this game going as long as possible. And this dividend is basically 75% going to me. So I'm taking on debt on this public entity and just paying myself this nice dividend. I can go do whatever I want with it.
Now, have you all seen any other articles about this, or anybody else kind of like blowing the whistle?
Actually, one of their shareholders actually right now is suing them for unjust enrichment, and you can find it on Bloomberg Law actually, because of these pretty much the same things that we're telling the audience now. One of their shareholders has actually realized and is currently taking them to court about this. But the part that kind of disgusts me about this, and I'm going to take it back to Fabio afterwards too, so Fabio can explain more into depth for some of our viewers here. The part that kind of disgusts me about this, giving Jeremy the benefit of the doubt, all he did with this was he literally just looked at revenues and then he was like, oh yeah, this is a buy. But like, the point that we're trying to instill here is how crucial it is that you need to research who the management of every single potential investment you might make is. Like, that is so crucial to do, because if I and Fabio would not have researched the management, we never would have found this out. And then it would have never have told us the story of where we are now. And the lawsuit wouldn't have made sense, anything like that. So
you're saying you should do your own due diligence instead of just listening to some hype YouTuber.
Yes.
Which I always say, if you read the 10K, you can at least, learn who the officers are. You can look at the auditor's opinion, which I think is important to look at too.
Yes.
Because there have been some stocks that I've pumped, or not me, but other people have pumped. And I've looked at the auditor's opinion and they're like, oh, there's a substantial doubt about this company's ability to continue as a going concern, which means it's probably, or it could potentially go out of business. And nobody freaking seems to mention that when they're actually looking, actually pumping the company on YouTube. So you really do have to know like where to look. You do have to do your research. And in my opinion, if you're going to do that, it just takes so much freaking time. and you could
Yes.
still be wrong.
Yeah.
So it's madness. But yeah, I'm looking at the statement of cash flows, and yeah, I see there's negative operating cash flow. Obviously, there's going to be negative free cash flow, and they paid, what is that, $5 million in dividends over the last 12 months.
Yeah.
Yes, that is kind of a red flag. It's like, why are you paying
It's a huge
dividends?
red flag. It's a huge red
Why
flag.
a company, if they're not making positive cash flows, the last thing they need to be doing is paying a freaking dividend. They should be using whatever cash they have left over to freaking pay off their debt.
Which, yeah, and then that also brings into question too, if the shareholders is 75% insider owned, what incentive do they have if they're paying themselves a dividend to really, to really change things? So that was
real quick. Some people just logged in. Now we're talking about fat brands, correct? Ticker symbol FAT, fat.
Yeah.
So if anybody was wondering, FAT, fat stock.
Mm-hmm.
Anyway, go ahead. Sorry.
And just a little bit about the management. Yeah. So he's basically we're interpreting the actions that he's taking as that he's therefore enriching himself. And then also going off of the lawsuit accusation from another shareholder that the management team is enriching themselves. So that's where we're basing that off of. Where we don't have a recording of him saying, oh yeah, I'm paying a dividend because I'm enriching myself. So you as investors, when you take a look at any form of any business that you're interested in, you have to kind of derive those uncertainties, right? So derive from those uncertainties. Well, what is management doing? What is their game plan? What does that mean for me? And if it's too confusing, my answer usually is, Rawson, if I get confused by something, I'm out. Mm-hmm. I'm on to the next one. If it's too difficult for me to understand, I'm out. And I'm perfectly fine with admitting when something's too difficult for me to understand. So for example, in this case, I don't want to play games. Well, I wouldn't consider this coming for a plethora of reasons, but let's say all the ducks are lining up in a row, and then there's this one little thing with the management just doing something bonkers, then I'm just going to move on. It's not for me.
Do you remember when Jeremy put out that video? Because sometimes you can always look and see, well, did the stock pop right after the video came out? And I've seen that with people have pointed this out with Meet Kevin. Sometimes, that's another story altogether, but we'll stay with Jeremy for now. They'll make videos and you'll see the next day the stock will freaking skyrocket. So do you remember roughly when that video came out?
It came out, I believe, in about.
Well, Austin's finding that he did. He put a watch. He bought one share to just watch it, and I think you sold it for what, a 40% profit. So for something like that, sure, it's nice. But again, you're only dealing with, so what's available for sale is only 25% of the float. It doesn't need much capital to fly in to make the stock go up.
Yeah, I mean, especially if you have a heavily shorted stock, which you said this one wasn't that heavily shorted.
You
oh my God, the market cap is $165 million. That is tiny.
Yeah.
Dude, a YouTuber could totally move that stock.
So, Chris, he put out this video February 12th of 2021, and I have their stock chart pulled up right now. On February 11th, 2021, the stock was $6.85. On February 12th, it shot all the way up to $9.50, and it hit its year high in June 28th of $13.67. So you make with that as you will.
I mean, we don't know for certain. We're just saying you need to be careful.
Yeah,
if you see a big YouTuber pumping a small stock with this low market cap and not many shares outstanding, and they've already bought into it, they really stand to benefit from you buying it. And of course, if the stock goes up and then they sell, that starts a chain reaction where the people that bought in later usually get screwed. So just keep that in mind when you're listening to, people like Jeremy pump up stocks that have low market caps.
Yeah. Yes.
And just for a little bit of disclosure, maybe it can spark some discussion here. We actually, Austin and I debated heavily. Well, not heavily, but we debated back and forth. We released a video about a microcap, but we said in the video, do not copy me whatsoever. Do not follow me. Do not do anything of the sort. Stay away from this. It's not on me at all. It was a Altasource, which if you pull that thing up, you'll you'll probably throw up a little bit on the inside. But because that thing is absolutely terrible. And I'll repeat that message here. Anyone watching, do not follow me on that. That is my personal kind of decision to invest in that stock, and I have my own reasons for it.
I'm YOLOing tomorrow, by the way.
Yeah. Okay. Well, that's not on me. Because I mean, like, it's one that, for example, we're trying to also like kind of espouse these ideas of like placing appropriate position sizing metrics, and sort of like you need to understand, okay, if this is something you decide that's good fit for your portfolio, well, the hardest part after that is figuring out how much. And for example, like this thing's like originally it was like 1.5% of the portfolio, and I've done well so far. I'm still doing very well. My average cost is about 6-7, and we can get into it, but I'm always hesitant.
I need to know.
ASPS.
ASPS.
Yeah, it's
I've never heard of this before.
Yeah, it's not good.
Well,
yeah, I mean, if you guys have watched my videos, I mean, like, you can always make money on like even growth stocks that aren't making profits. But me personally, there's something about companies that aren't profitable, or they have decreased or increasing negative cash flows. It just scares me away. But you can make money on stocks like this. I mean, I haven't done any research on it, but if it's not profitable, but it has fast growing revenues, I mean, there's always a possibility you can. Are you seeing this as like a long-term investment, or is it kind of like a momentum play?
No, it's actually kind of, so I thought of it as kind of like insurance, just in case we had because it's a counter-cyclical company. So basically during a downturn in the housing market, if there's a lot of foreclosures, they do very well because that's their largest segment of their business. And this business has been made illegal over the past year or so. So that's the cause of that massive tanking. And I was watching this, for quite some time, just waiting for when I thought was an appropriate risk reward in the price. And there are still a lot of risks, which is why it's still a small position in my portfolio, and it will never be greater than that. So like, for example, I mapped out that in a worst case scenario where everything else in my portfolio might not do so well, this will or could have serious gains, and it could offset the rest of my portfolio. But if this thing goes to zero, I won't even bat an eye. It's like 1 day's worth of movement, price fluctuations. So that's how I kind of looked at it. And it's not so much a long-term bet at all. It's actually if it passes a certain price threshold within 1 or 2 years, like for example, if it got to 20 in less than a year, I would take my profits out of it actually. And I can get into why, but that's because I would think the market's getting a little over exuberant, and it could easily do that. And that's why I really don't want anyone to just, that's why I'm so careful with that. I really do not want anyone to follow me in on this.
Well, I always tell people, it's like, okay, if you max your tax advantage accounts,
yeah,
and you want to speculate with less than 5% of your portfolio, you do whatever you want. We're not telling you to buy the stock, but if you like what he's saying and you're like, okay, maybe I'll gamble on it, whatever, as long as you don't expose yourself like other clowns on YouTube putting half of their portfolio in Tesla.
Yeah, or say that this stock is a definitive statement of fact going to go to the moon.
Yeah, I'm trying to be the opposite of a salesman with this stock. I'm literally trying to...
Is someone paying you? Did you get a little deal from the CEO? He's going to give you some stock if you pump it.
I wish. I mean, I wish.
Oh, dude, I can't wait until I get big enough and these little penny stock companies start emailing me to promote them. Oh man, can't wait.
Are you going to be able to oust them? Or are they probably going to sue you for that?
I'd have to talk to a lawyer. I mean, I say I'm going to do that, but you got to be careful with stuff like that. So,
by the way, between the two of us, if you don't know our personalities yet, Austin's like more like by the books. Like I'm more kind of gun ho to a certain degree, not like in everything. Like for example, with talking about this company, that's when I'm like I don't want to
literally see in the way that we dress.
Be very careful. Yeah. That's
Well, if you're Fabio looks like he's kind of chill, and You know,
I'm pretty chill. Yeah.
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 You know,
Fabio's
look
very
at me.
chill.
I'm wearing a crappy NASA shirt, so
Yeah. And
I'm definitely
I'm here with
it's
my nice
almost like a
sweatshirt.
circle. It's like from the bottom,
Yeah.
it's like well dressed, and it's like casual, and it's just like I'm garbage, basically.
But yeah, it's
Cool.
like for fat brands, it's these tiny micro caps. Just that's one example out of many that these guys are kind of like. I think very good food companies, another one. That's
What is it with him and food companies?
no, it's not food. It's Soy Boy food. It's like what's called
there's a
vegan
difference.
food.
There's a difference.
no. Both of you are wrong. It's technology. It's advanced
No,
technology.
it's disruption, guys.
Disruption.
Yes.
If you look at if you look at 10Ks of all these companies that these YouTubers pump up, you're gonna see disruption and what is the other freaking word? It's like innovation or
Innovation.
Disruption and innovation. If you see those two words and it's just a standard company, they're just trying to trick you. Okay. They're trying to make it seem like they're new and exciting, which is why they want you to invest in, certain companies like that. If I see that, I freaking stay away from the company.
Yeah, I think one of my favorite videos, Chris, that you've ever put out is actually the one on Archimoto. And I think that one is hilarious because he pumped, like Kevin pumped that so hard that he was like, oh, I'm all in on this. This is my next big thing. And then when Fabio and I kind of took a look at it too, what was it, Fabio? It was like negative gross margins or something across the board. And like instantly we were just like, nah, X. So.
Yeah.
Go ahead. Sorry.
No, I mean, like devil's advocates, like some Archimoto fanboy, for whatever reason, foaming at the mouth, might say like, oh, but that's because they're right now just completely just investing in the product, blah, blah, blah. I mean, that's always the same arguments with these electric vehicle startups that go to vaporware technology. That's what it's all called. Anyway.
Well, I mean, my suspicion of why the gross margin was so bad, it was probably because they barely made any vehicles probably in that quarter or year. But they had to allocate the overhead, which is probably huge. So while they were scaling up, they probably had a ton of overhead to allocate to a few vehicles. But as they ramp up production, obviously the gross margin is going to improve. But at the end of the day, I mean, sure, maybe Archimoto one day will be a great company, but if it's burning cash like freaking crazy and they're undoubtedly diluting the current shareholders, why would you risk your future on something like that? I mean, sure, you can speculate on it, 1% of your portfolio, that's fine. But a lot of these guys that are pumping these stocks, they're going all in or, pretty hardcore. And if they're wrong, it's going to screw them and it's going to screw you as the fan of their channels.
Oh, yeah. I think like long term, I mean, we'd have to see when the real downturn happens, not this like fake downturn that we had for like.
You didn't see Kevin's video? He said stocks are going to drop even more, man. Like, what do they go down? Like, what did the index go down? Like 2%?
Oh, yeah.
I think the world's about to collapse, right?
They have crystal balls. He always says where like, oh, I told you that this was going to happen months ago. And if you buy my course, blah, 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 you'll see the next one. Like, if this was true, every hedge fund on the planet would be breaking down his door saying, work for me. Here, how much money do you want? Oh, this YouTube money will pay you like 3 times. Whatever. I don't know.
I mean, look, you can expose these guys so easy. All you got to do is go back a year and find a video with them talking about a bunch of different stocks, and then you just check up on the stocks now. I mean, I did that a couple times. Like I did it with George Lopez, whatever his name is. He's some stupid hype YouTuber. I looked up a video where he pumped 3 stocks, and they were all down between 50 and 80%. You just got to go back and look at the old videos. That's how you expose these guys. Because, like you said, they're always going to be like, "Oh, I predicted this." I mean, you just say a bunch of random crap, and then when something happens, you're like, "Oh, see, I said that," But you could just say a bunch of stuff, and of course you can claim you predicted it when really you were just saying a bunch of random stuff.
Yeah. They're just not held accountable enough right now on the YouTube community. But I think that's changing. I think your channel's evidence of that, and other channels that are slowly popping up are evidence of that. Like, I think Everything Money was like the first to kind of strike this niche. You have Sven Carlin, which has his some issues, like I think with his course being a little pricey for what you're really getting. But but stuff like that. It's getting out there. Some good's coming out, not just only bad. As far as I can see.
I feel like we're losing the war, but
we're losing the war right now.
No, we're losing the battle. We have not lost
the optimist. The optimist.
I think the war is going pretty badly. I mean, because like you look at like channels that talk about responsible investing, value investing, whatever. That those grow at like snail's paces. But you start talking about cryptocurrency, hype stocks, you'll explode. You'll make hundreds of thousands of dollars.
Like in my personal opinion, this is only until really like the bear market hits, to be completely honest with you, which is why I say, although we're losing the battle, we've not lost the war. To which when
is the bear market going to come though? When is it going to come?
Yeah, there's really no telling. So you just got to keep doing what you're doing right now. Just keep exposing these guys. We'll keep making value oriented content. So
I'm tired of waiting. It's just like any day now. Can Tesla crash? Whatever. By the way, I'm curious. What are your thoughts on Tesla?
Oh my. I'm going to let Austin go first, and then I'll go right after. Yeah.
I would probably say that my thoughts on Tesla. I admittedly have not really done a whole lot of research into it because just the nature of it itself, I personally think it's overvalued just relative to its PE, its PB, etc. But in terms of like the business itself, Fabio was actually telling me something interesting about. He showed me a video where they actually went into China, and there was like a whole thing that kind of happened there in China where it was something to do with where they were like invited in. Elon was invited in, and then what ended up happening was Elon was then actually like almost shafted out of that country in essence. And Fabio, you were kind of telling me about that a little bit. Would you elaborate a little bit more on that?
Well, you're delving deeper into the weeds than I was going to go initially, but that's more like a different kind of risk that extends to a lot of American businesses doing business in China, which I'll save that for later. But as far as let's just use Tesla domestically, just as a business. Like, okay, so the product, I'll separate the product, which by the way, I have a Model 3. It has its quirks. Like for example, there's a glue that rots in the inside of the car, and it smells really bad. Austin can attest this because he's driven it in it, and it's really bad, especially on a hot day. And
he's blaming the glue, but it's actually probably his like body odor or something.
It's just me.
It's the glue, man. Yeah, right.
But in all seriousness, like it's something that they use this glue, and it's a temporary remedy, and it costs a lot to work with unless you do it yourself, which I'm not going to do. And so there's that, but that's only in the Model 3 and the Model Y. But aside from that, the product's pretty good. It's a pretty good product. It has a lot of vaporware and when I refer to vaporware, for anyone who doesn't know, it's like hype technology. So hype technology in like the self-driving, there's still some quirks. Like there's a corner that I can take really easily, and for some reason, every single time, I'm almost going to crash into the oncoming traffic. Austin thinks I sometimes trust it too much.
He does. He does.
Scare him.
It's not a thought. He does.
And here I am criticizing it live, but yet on those moments, I trust it too much. Which I'm aware of. And but as far as an investment, long story short, I wouldn't do it. I'll be diplomatic. I would not do it in 100 years at this price.
Have you watched Solving the Money Problem? Have you heard of him?
I heard of him, but you got to remind me, what does he look like? What is he?
Australian accent, I guess, some kind of English related accent. He's got a backwards hat, and he basically just constantly talks about Tesla and how it's going to like 25x, and you got to go watch it. It's comedy. It's real.
I'll write him down right now, actually.
Fabio, how about Tesla to $6,000?
Oh no, please. Video.
Yes, yes.
maybe with inflation and like a reverse share split. I mean, anything's possible. Hyperinflation. Any share price is possible. It's just whatever the circumstances are in the economy.
Oh yeah, for anyone who doesn't know, I'm Venezuelan. I know a lot about that.
Yeah,
I know I don't look it, but I'm born Valencia, Venezuela. So I know inflation.
Oh, so for anybody that's curious about your investment styles, I kind of want to hear about that. Are you guys like part index or all individual stocks? Like just each one of you, how do you kind of invest? What's your strategy?
Austin, you go first.
My retirement portfolio is about 50% index and then the other 50% individual stocks. And the reason why I'm doing that technically is because I'm pretty young and I just would personally like to kind of take the risks and I kind of enjoy that. Now, I realize kind of the pitfalls with that strategy, but I'm willing to take that myself, those risks as an investor myself. So, and then I also keep my other portion of my retirement account 50% index funds, and I contribute to them pretty regularly and et cetera. So,
and for me personally, this is how I roll. This is how no one should really follow me. Follow your own way. I'm all individual stocks in different geographies. So I've invested in Russian companies, Indian companies. I actually have just recently sold my last Russian position, which I'll maybe get to if we have time. But yeah, and I always maximize my tax advantage accounts. My favorite one is the Roth IRA. I love that one so much. Yeah, never have to pay taxes. It's Uncle Sam again. And as far as just like why I decide to do that, it's for the time being. As far as I've been doing it in more serious sense, I've been doing pretty good for myself, but that's me. But that's not you. That's me. So anyone watching, don't think that that's something that you must do or something like that. I actually always say for most people, for the grand majority of people, it would be very advantageous for you to maximize tax advantage accounts and use index funds, because that is a tool that was created by the financial market. Now, we can get into like the Michael Burry, like what he discusses with the risk and index funds and how serious that might be or might not be. But as far as I would say, I don't want everyone, but I think it's important that everyone has some exposure. And it could be any form of investing. I say everyone, like, okay, what if stocks isn't your thing? Well, what if you're just really passionate about real estate? It's just something that can get you to grab capital and generate returns on that capital. Now, you have to be honest with yourself whether or not what you're doing is good. Like, are you actually spending the proper time? Are you being successful in real estate? Or are you just wasting your time and making blunder after mistake? And be honest with yourself. If that's not for you, then do something that's more passive, such as index fund investing or anything else that's kind of available to you. Because I don't want to say that index funds are available to everyone around the world, but I think they are for the most part.
I'm going to fact check you and then,
yeah. Fact check
I'll make an attack video if like one country doesn't have index funds.
Yeah. On this one. Yeah. Oh, maybe. Well, actually, in Venezuela, I think no, I don't know. Yeah, I don't know. Bitcoin's really huge there, by the way. Crypto fans.
Oh God, are you guys crypto shills?
No.
What's your favorite crypto? If you had to buy one, what would you buy?
If I had a gun to my head and I had to pick a crypto, okay, I'd say Bitcoin, because the only value I can derive from a cryptocurrency is the network value. But even then, that's very ambiguous of like what the value is. But like I would say, people view it as a asset when it doesn't necessarily fit the traditional definitions of something that produces value. It doesn't produce value. And then they all simultaneously say, well, it's something that stores value, which is, depending on what economist you talk to, well, that's the definition of money, right?
Yeah, well, first of all, it's laughable that it's a store of value, but continue.
Yeah, exactly. So then I can understand where some people are coming from. But for example, if I talk to someone, they always say to me, oh, well, Bitcoin will be worth this many dollars. And then I say, okay, well, I play the thought game with them. It's just questions, because usually when you challenge someone like right off the bat, they're going to close off. So what I'd like to do is the Socratic method. I ask questions and say, okay, well, why should I buy Bitcoin? I say, well, it's going to be worth this much in this years. And they say the keyword in dollars. So then I'm like, okay, so what your end demand is still dollars. Like you're not seeing the thing. Like you're the point of Bitcoin, the why it was created was so that you like separate it as a system and use it as a currency, which is actually what Venezuelans use it for, by the way. If any Venezuelans are watching, they can maybe attest to this. They have families still there, but the government is it's an authoritarian regime, and you can't, if you want to go through the right channels, you can't get your money out. So Bitcoin is being used at the moment to get your money out in a kind of like a workaround around the formal systems that exist. Unless you're in bed with the government, then you can get money out. But it's being used in that manner. So like if I foresee somehow, which is there's a lot of risks involved that it somehow does expand and become a actual currency that people use for whatever reason, then there could be value. But how many assumptions am I making there, Chris, that it's going to do that?
I lost count like 5 minutes ago. Yeah. At least 10.
Yeah. So each assumption has to be assigned a risk that you have to then discount to today. Like if I could buy.
Oh, have you done a discounted cash flow of Bitcoin?
No, you can't. You can't. So I'm not discounting the cash flow, but you're discounting the risks, the probabilities.
So you know how I know we're in a bubble is like, so I made a video, like a spoof video, and I originally didn't call it a spoof, but I was like, oh, I did a discounted cash flow analysis of Dogecoin. And I actually got like a lot of people coming on and commenting and like, following what I was saying or like asking me about my strategy. And I was like, oh my God, guys, this is a freaking joke. So it's just terrifying to me that people are so ignorant of this stuff and they're so gullible that they'll listen to somebody talking about Dogecoin discounted cash flows and take it seriously. So after that, I was like, I'm done with spoofs. But that's how I know we're in a bubble with cryptocurrency.
Yeah, and like honestly, if I'm being honest with you, to kind of pair it off what you just said, like when I first started investing, I didn't really have an idea of accounting or finance or any of that kind of stuff. So I went to university and I'm in the process of getting my degree in accounting. But before then, I realized that it was important for me to at least develop like an introductory, like elementary knowledge of like what these certain things were. Because the issue is that if you have no knowledge in anything that you're doing, like you will lose money. And the worst part is that like, as I'm starting to learn more and more, I'm starting to realize like how many charlatans and scammers and grifters and fraudsters there are in the finance industry itself that are just looking to steal gullible people's money. So it is so advantageous for someone new to the markets to literally go in and just even buy Little Book of Common Sense Investing. The Intelligent Investor is good, but that's kind of a difficult read for like absolute beginners. So like even I read Rich Dad, Poor Dad, and like just like these very cheap resources in which that you can read and you can just kind of gain like an elementary idea of the way that you should approach these things. That way you don't end up getting taken advantage of. That way you don't end up losing $24,000 on courses, etc. And then especially too, when it comes to cryptocurrencies, the reason why I don't invest in them personally, and this is a way shorter synopsis than Fabio, is because I just don't understand them. I don't understand the way they work. I know what blockchain is, but I don't understand it. And because I can't understand it and I don't understand it, I don't invest in it. I'm not going to put capital towards it.
And you really don't need to understand. I mean, at the end of the day, you do understand that it doesn't produce cash flows. And that's all you really need to know. It's the same thing with gold, right? Like any commodity, any kind of crypto. If it doesn't produce cash flows, then it's all based on supply and demand only. There's nothing else. There's nothing underpinning that asset. So, I mean, you don't have to understand crypto to know it's a terrible thing. Because I get comments all the time. You don't get it. You don't understand this. You don't understand that. It's like, I understand it from an investment perspective. That's all you need to understand when you're using it as an investment.
Yeah, it's kind of like being a Forex trader in a offshoot way, because you're kind of like these crypto guys are always saying like, oh, I'm going to make thousands of % in, I don't know, like a month or a year. And these Forex guys who used to, I remember when those scams were going around, they would say, oh, you'd make a 2% here, 1% there, and then it adds up to this amount, and you're just trading currencies back and forth off charts. It was always like a Bulgarian guy, some Slavic guy, just like doing YouTube videos about it. I remember that. It was like 2015, something like that. But anyway, for what I say to people is like, okay, sure, it's gonna be the currency of the future. Everyone's gonna use it. I'll own the assets, and then I'll ask you for it as payment for the use of my asset. How about that? You know, I'll still come out okay. That's how I say it.
Good stuff. So we got time for one more topic, and then I'll see if the audience has any questions about you guys, any specific questions, and then we'll close it out. So what would y'all like to talk about for the last 10 minutes? BABA, China, anything.
I think BABA and China go together.
Yeah.
But
Yeah, I mean, there's lots of things in China, you know. The Great Walls in China.
Oh, yeah. Okay, well, specifically Chinese financial markets and Chinese law, coincides with BABA. But I guess we can talk about BABA because maybe I think that's a interesting dialogue that can come from that. That both is fruitful for the YouTube audience and everyone as a whole. So where do we want to begin with this?
So obviously, you know, I have invested in BABA, but
yeah,
I've always talked about, it's a great fundamental company, but you also have some legitimate points where, you know, you don't really own the stock. So I think it'd be helpful for people to understand kind of what's going on. Like, how does that contract work, or like, how does the whole system work, and what do you really own, and then et cetera, et cetera.
So essentially what you end up owning is something called a VIE, or variable interest entity. And anyone can kind of use I think if you go on Google Images, you can follow along, but I'll do my best to make it as simple as possible. But you are the foreign investor, and then you own something in the Cayman Islands, and that's typically called an SPV1. And then that entity is what BABA is. So when you see Alibaba, that's what that is. And then Alibaba has a contract with another entity. And this is where a lot of people get it wrong. I've seen, I think, one YouTuber, which I was like kind of fairly proud of, that they did get this right. Because usually when people comment on the VIE, they get this wrong. That the entity in Hong Kong is still not Alibaba. That is also known as an SPV2. And that's listed on the Hong Kong Stock Exchange. And you could buy shares of that one. So like Sven Carlin would say, the VIE is a problem. Go buy or for delisting is a problem, go buy it in Hong Kong. Well, you still don't own it. That's still part of the VIE. And then the SPV2 has a contract with vaguely known as a WFOE. And the WFOE is an entity on the mainland that then has a contract with either the domestic company, which is Alibaba itself, or more typically a People's Republic of China individual who is legally allowed to own the shares. All right, so there is like 4 layers between you and the actual company. And something that everyone should know, you can kind of do a simple Google search, don't take my word for it. Just understand the difference between contract law and property law on a broad level. That property law, assuming the same jurisdiction, by the way, that property law is more heavily protected than contractual law. And again, I'd actually go back to the origins of VIEs. VIEs were originally created as these structures that basically were protections for the end business to the shareholder. So the shareholders had very limited recourse as to how they could press or sue the actual business for whatever reason, you know. So like you probably see sometimes these frivolous lawsuits on businesses. Well, that's more possible when you own the shares of a company, but when you own it through a VIE, I would have to say just good luck. And if you want historical context for this, actually more recently, which I'd point to Yahoo, which owned a big stake in Alibaba along with SoftBank. And basically what they were trying to sue over was Jack Ma was taking away Ant Financial. And that's the equivalent of Jeff Bezos, who runs Amazon. Well, he doesn't run anymore. He retired from the CEO position. But Jeff Bezos saying, oh, yeah, you know this AWS thing, you know this golden goose, the thing that lays the golden eggs? Well, I'm going to take that and separate that away from Amazon, and you're going to get nothing. So that's what was attempted to be done. And then they settled for some billions of dollars. It was reported on, I think we cited it in the article we have on our website. So don't quote me on the citation. I think it's Reuters at the time. And the Reuters author was surprised themselves about how little control Yahoo and SoftBank had over Alibaba. But when you understand it under that context, it makes a lot of sense. They had no control because they didn't own anything. It's very different from... go, Austin.
Just to kind of interject for a quick second, and then Fabio, you can continue. It was really, really difficult for us to find this initial article.
Oh, yeah.
It was like it was scraped off the internet clean. It was really difficult to find it. But anyways, Fabio, continue. You're doing such a great job.
I mean, you guys have done some really good research. I mean, because you guys have a good point. People really need to understand that, yeah, you don't really own the company. I mean, you can always evaluate, well, what is the risk that it's going to delist? What is the risk that it's actually China's going to say, oh, well, too bad, you don't own this stock or whatever, it's going to zero. There's always that risk. You have to evaluate that, when you consider investing. But you guys have really good points. That's why I wanted to talk about it.
With that point,
something else. Go.
Well, I was going to add with that point. That's another thing. I think we're more or less unique in the way we're approaching this, because I've heard that argument before. I actually disagree with all those people that say they're going to delist. There is absolutely no reason for the Chinese to delist. Why would they? Like, if I was put in this position where I can just create these VIEs and then I can sell them to you and you give me capital, I can grow my business. And then the implicit cost of capital when companies go public is a loss of ownership, so dilution. But with the VIE, what am I really giving you? It's very ambiguous with that. So like, the cost of capital is potentially zero. So if I can just do this for as long as possible, I think I'm going to make out like a bandit, because the real owner of the shares is this PRC individual who then has contracts with the WFOE, then has contracts with the SPV2, then has contracts with the SPV1, that then you own the SPV1. But the PRC individual, he's not really losing any share dilution. He just has a contract that he's supposed to share the profits from these shares with you. But he's supposed to share the profits with this entity, then supposed to do it with that entity, and then on and on and on.
Well, wouldn't that be an argument for, like, if it's such a great deal, because like they don't have to basically dilute ownership and they get funding from the West? I mean, how likely do you think it really is that they're going to end this arrangement anytime soon?
They're never going to do it. If it ends, it will come from the West. It will come from, and that's why
Yeah, which actually, we've actually been seeing kind of an initiative towards that with the whole regulation thing, and people saying, oh, I'm going to get, I'm going to be greedy while others are fearful. And it's actually, I was actually reading, while we were doing the research ourselves as well, I was reading something that actually said that they have until, I think it's about roughly 2022, to allow the PCAOB registered firms to come in and audit these companies before they're just taken off of the exchanges. So that right there could be a potential headwind towards like these VIE entities just raising capital. So,
well, he's more of the optimist on that. I think they're going to play around with it, and they're gonna keep the VIE going. They're not going to delist. There's going to be noise. So I do think like you can own these things and then still sell them to someone, but the way I see it is I would want to own an asset knowing I own it, and then I can do a discounted cash flow analysis on it, because the end cash flows, I own those cash flows. Now, we can get into the capital restrictions, which is like a whole other like topic about China that complicates things, even for investing in American companies doing business in China, that no one really talks about. And that was actually my one of the topics in the newest video we posted. And I'm working right now on an extensive article to go a little deeper into that, because I don't want to make things like an hour-long video. Just want to.
Yeah. So are you more worried about like, issues coming from Western countries, or are you more worried about China doing something with this?
I am not worried whatsoever that China is going to do anything to harm the ability for these companies to raise capital in the West, because it benefits them. And actually, I think Kyle Bass has talked extensively about this, how they've caught the People's Republic of China's Navy, for example, selling bonds into the West, and our pensions. They masked it through several different entities, and we indirectly, not indirectly, but we literally directly bought bonds that gave money to the Chinese Navy. Like, this is I would never stop it. It is entirely in their advantage to keep this going as long as possible. But when the West, or maybe the West never figures it out, but if the West ever figures that out and then stops it, that will be the sell-off of a lifetime for these variable interest entities. I think this is all.
I mean,
noise.
I think they probably, I think the government probably knows what's going on. I just think there's so many, we're so interconnected as, the two largest economies in the world. I think we know about it, but it's kind of one of those things where it's like, all right, let's not ruffle too many feathers. We have a lot of U.S. investors that have a ton of money tied up in these freaking, variable interest entity structures. Let's just kind of ignore it. That's what I kind of think's going on. Maybe I wouldn't be surprised if the government didn't know about it, but I do think they are aware. They just kind of don't really acknowledge it.
If I want to be clear on that, I don't actually think the government maybe the government doesn't, but I'm saying the investor base. If the investor base collectively says okay, well, what is it that I really own? Am I going to receive cash flows from this business? Because I don't know about you, but if I look at any asset, I judge it based on, even if for example, it doesn't pay me a dividend, it doesn't buybacks. Let's say right now it doesn't. Google in 2015 or 14, it's diluting me, and it's no dividends, no buybacks, but I see the sales growing. So what am I buying there? Well, I'm buying the potential that for future returns, and I'm not buying it for current returns, and I actually don't mind the dilution, and I can discount that and play around with all that. But if I know an entity potentially won't ever give me a net positive return on the as cash flows, or either through dividends or buybacks, so that's capital returns, a net positive, all right, meaning that they're not taking more than what they're giving you, then we're talking, right? So for example, VIEs, I don't see that. I actually haven't seen one yet. I see some that do a dividend, but they issue more shares and they collect more in capital raise than they do in the dividend, or they do the same with the buyback. They'll do a token buyback. They'll say, oh, we're buying back this many shares, and then they issue this many more shares. So the net is still negative, or positive them, negative the investor base in this jurisdiction. That's how I when I see, if I were to see that the which they have no reason to, but if I were to see that the VIEs, if I could see that capital outflow change to a positive, that would then calm me down on this risk a lot. But until I see that, I'm going to be kind of very hesitant to put capital to work in
So
China.
Do you have any China exposure at all, or are you just 100%?
No. And I'll go as far as to say, any business that has heavy operations within China, I either discount them heavily, because I believe that is a unperceived risk that most people are not looking at, or I just avoid them if it's too difficult. For example, Las Vegas Sands, I avoid that one. Wynn Resorts, avoid. I can get into
actually something else too, to kind of also piggyback on what Fabio's saying. We're actually releasing a video tomorrow on Disney. And what we found together as Disney is Disney operates in 4 business segments. Media, they have their studios, they have their consumer products, and they have their parks and experiences. And what we actually found out is that their Asia parks are actually owned through a VIE structure. So their Hong Kong park is either 43 or 48% owned. The Shanghai park is either 43 or 48% owned. Now, this being a CPA, the way that debt is valued, Chris, is it's valued on a level 3 fair value input, a level 3. So basically, when me and Fabio look at that, and to kind of echo what he's saying, that there is a risk in this business segment. So because of that, we increased our discount rate in our discounted cash flow analysis of Disney itself. So
yeah, the thing is, for anybody watching, if you think a business is super risky, obviously you just discount the future cash flows by a higher percentage. That's how you compensate yourself for that. I always use 15 in my videos, but that's just me. But if you're really worried about China and you still want, some kind of exposure to it, 20, 25, 30, or Fabio does, nothing at all. That's perfectly fine too. It's just, for me, I want to be exposed to China. There is that risk. I don't think that structure is going to be, gone away with. So I'm willing to sacrifice, make concessions in order to get exposure to like one of the few areas right now that actually has explosive growth. That's kind of my logic. But at the end of the day, I mean, I'm not massively exposed to China. I don't think
it's not going to destroy you.
If you buy VT, I mean, you have like what 3% China. That's nothing. Just keep that in mind.
And I mean, also kind of apart from the VIE structure itself too, with the PCAOB right now, the Chinese government and them, they can't really reach an agreement about allowing PCAOB firms to come over to China to allow them to audit their financial statements. So we see with like Luck and Coffee booking fraudulent revenues, et cetera. Is that something that potentially worries you, Chris, about investing into China itself, that the numbers that they're reporting might not actually be what the numbers really are?
I would say for smaller companies, yeah, like the new ones that are really sketchy and there's not much information. But about the huge giants, no. I mean, it may not be exact, but there's always been accounting fraud, even in the United States.
Yeah.
So I mean, if you're going to buy stocks, individual stocks in China, I would recommend personally you stay with the big boys. If you're going to buy any stocks at all, but if you're going to buy these small cap companies that there's really not a lot of attention on them, and you can't really judge if they're actually doing anything, there's probably a much higher risk of fraud in that area. So no, in general, I'm not worried about it for the very large companies.
Mm-hmm.
Yeah, I would tend to agree with that. If you're concerned about accounting, that's not my concerns for the big boys, like Baidu,
Daddies, yeah,
Tencent. But yeah, that's pretty much like the general risk I see in China. Why personally, I'm not telling anyone to follow me. I might be just an idiot.
No, I mean, you have legitimate concern. I can't. Oh, you're full of crap. I can't say that. I mean, obviously there is that risk. It all depends on whether you think it's actually something's going to happen. The stock is going to go to zero, or you think eventually that's going to get blown over. It's all about what you think. I mean, if you don't like China, you don't have to buy it. You can just buy your index funds, like I always hammer, and just go to the beach. That's all right, so we have some interesting questions, guys. And by the way, if you're watching, everybody, this is Capital Mindset. If you just tuned in, they have a YouTube channel. I think they have a blog. You have anything else besides that?
For now, no. But we will set up like an audio, so podcast-esque, and we're trying different formats to just get content out there. So like sometimes just be me, sometimes be Austin, sometimes be both of us. Most of the time, both.
Most of the time, yeah.
But depending on our work schedules, sometimes just one or the other. So I'm a night owl. Like I stay up like 5 a.m., 3 a.m. and then
oh my god.
So some nights, no, it's bad.
What's wrong with you?
I like to wake up around 5 a.m., 3 a.m.
Yeah, so you see.
Yeah, check these guys out. Subscribe to their channel. I know it's hard to click a red button. It's really hard. Anyway, we have some interesting questions here. Okay, I don't know if you guys can answer this. This is a really tough one.
All right.
Oh crap, not that one.
Oh no. Okay, this one.
All right.
What do you guys think about that?
Well, in Jeremy's defense, he was on the track team for his community college. So that doesn't mean that he is.
We're gonna do like a full analysis here. Well, I weigh I weigh 215 pounds.
Yeah.
And that's it.
Isn't Jeremy like 6'3" or something? Maybe he's got some reach. You never know.
Yeah, probably. Yeah, probably. He's got some pretty solid reach. He's got that athletic track record to prove it too, Chris.
Yeah. I love that article. Oh, he was a track star or whatever.
Oh, he wrote it. Oh, I'm unaware of it.
Yes, Fabio. It was, and like in the entire article too, he's talking about how like he learned from Warren Buffett, even though during his Everything Money video, at least in my opinion, it was pretty clear and obvious he didn't know what a discounted cash flow model was, because you just called it a calculator that you just plug numbers into and it prints things out. You remember that, Fabio?
I don't know what you're talking about. The forward P is the most reliable metric.
You just gotta trust the analyst, bro. It's all that. Just read analyst reports and then put it on YouTube. You'll get a billion trillion subscribers.
Jeez,
I don't think there are any more questions. Disney video tomorrow. Y'all are putting out a video tomorrow, right?
Yeah. We're probably gonna put it into two parts, maybe all in one part, but yeah, because depending on how long I think the full video is.
Cool.
Ooh.
So go watch our video tomorrow, and then maybe I'll rip it off and make one myself and just copy everything they say.
Oh,
So
yeah.
what about this one, guys? When's China exposure? And what? Because I think they have 46% of their revenues from China.
Yeah. So I would probably, again, this is my personal opinion. Do not use this discount rate just because I said it. But for Wynn Resorts, I believe an adequate discount rate would be, and it's going to sound hefty, but it's 20 and above % because of very specific risks associated with their business in China and Macau. And I'll say this little detail, be very brief about it because I don't want to delve too much into it. But the current GAAP regulations for how they report money or cash, Wynn does it really well where they do report it's separated, but Las Vegas Sands does not. Okay, so when I was looking at the two, I liked Wynn as a giving information readily available to shareholders rather than Las Vegas Sands. You had to do a lot of digging to find out. And that has everything to do with the capital restrictions within China as far as cash coming out. But GAAP, and correct me if I'm wrong, Chris, because you are the CPA here.
I'm on the spot.
So, on the
I've
spot.
taken the exams in like 2 years, guys.
Well, I'm kind of on the spot because if I say something wrong, I'm going to be like,
Yeah.
But cash is supposed to be a liquid, readily available asset that is available there to pay off, any kind of form of expenses, whatever you want. It's supposed to be quick, readily available within a certain time period. But cash in China is technically not, because they have to go through a certain program. And to quote it, so anyone can just research this themselves, something called the State Administration of Foreign Exchange. And it's past a certain amount. I believe the number, don't quote me, is 500,000. Don't have that number in front of me. And anything above that, Wynn has to apply to get that money out. And typically the regulators do not like to see that too much. So I would discount the Wynn's cash flows in China at about, I don't know, whatever you feel comfortable, but I would do like 70%, like take off the value of that, just because I don't put it at zero because things could change and they could take that money out. But to be conservative, because again, if on a conservative measure, if the investment makes sense for you, that's better than if you're making all these aggressive measures, all these assumptions, and then you're applying more risk into the investment. But I would apply a 20% or above if you can get it there. For me, actually, I will rephrase that. If I could get it at 20% discount rate or above and the price works out, I'd be comfortable there. Consider it.
Yeah, and you also have to factor in, like, everybody has different revenue assumptions. Everybody has different, profit margin assumptions. Yeah. All that factors in. But basically what he's saying is, the more risk you think there's involved, the more you have to discount. 20%
exactly.
Is pretty reasonable to me. Yeah. All right, this is a stupid question. Can someone do a dance? No, we're not doing a dance. Austin, are you taking reg or FAR first for the CPA exam?
So that's actually a very interesting question. The plan was for me to take FAR first, but I actually enjoy FAR. So I think what I'm going to do is take reg first. Yes, I know. I actually enjoy FAR. I really actually do. I enjoy studying for it. I enjoy reading the book, everything. So I actually think that I'm probably going to take reg first. That's
I enjoy reg. No, reg is the tax exam for the CPA.
Yeah.
Hey, if you need a tutor,
Yeah.
Oh yeah.
I'll give you a discount. I'll give you 5% off.
Oh, meet Kevin. Discount
expires. Actually, if you go to meet Kevin, I'm sure he'll teach you more about financial accounting. All right, this is the last question, guys, because I'm an old man. I need to go to bed. If you know anything about this, I don't know.
Yeah. So I did research on the industry as a whole. I think if I had, again, gun to my head, had to put or consider an investment, I would say do more research on desktop metal, because I don't want to say that's the one I'd pick, because again, I don't want anyone to copy me or anything like that. But I do more research on desktop metal. I believe what their vision is, keyword vision, for the future is interesting as far as mass production, manufacturing. Whether or not it's vaporware or not, no idea. Not a subject matter expert. I would actually consult one if you know one. I happen to know one and was discussing with them about this extensively in months ago. I think 2020 in June or something like that. But it's been a while. So I'll say that the one I was interested in the past, or at the time that caught my eye, was desktop metal.
Yeah, I think he's been asking me to make a video about that. I'll look at it. I know. I'm looking at the stock on Robinhood, and I know you can trust Robinhood, but I don't see a PE ratio. So probably not a stock I would like unless they're like rapidly moving towards profitability, and you can almost project that. So
yeah, no.
Probably not one of my companies.
No.
Okay, last question. I'll answer this one, guys. Yeah. Nobody knows how far growth stocks can fall. Okay. It's all about human emotion and sentiment. Stocks could fall 90%, 95%, 99%. It's all depends on how much panic there is in the market. But you just have to understand that stocks do have like a fundamental intrinsic value, and that eventually in the long run, they'll return to that. So pick a stock you like, buy it at a good price, hold it for a while, and don't worry about short-term fluctuations. Anyway, that's it, guys. I'm old. I'm 32. I don't know how old you guys are, but I'm an old man.
Don't worry. We're all aging together.
Anyway, thank you for coming on. Let me put up their thing again. Please subscribe to their channel. I like their channel. They do some good stuff. They're not grifters, unlike 99% of YouTube. And yeah. Any last comments?
We're gonna win the war in the long term. Have faith.
Yes, we are. We're losing the battle, but we'll win the war.
Yeah.
We all have small channels, but maybe in like 10 years we'll we'll be in Big Kevin's position. Maybe.
Yeah. Well, for me, this is a nice pastime. I really enjoy always talking about stocks. Like if you never meet me in person, like I'm a freak.
Yes,
like
yes, he does.
If I find someone
all day long.
If I find someone, and that's why I like my work, it's like I can do that. But like if I find someone out there who like likes to talk about as much as I do, I get so excited. And eventually, like when I'm an old man, I don't know, do like a mentorship, and I'll try to find someone, young one like me, and then like we can talk stocks all day. But that's that you see, like that's the dream. But whatever.
Yeah, dude, you guys are welcome to come on. Me and Jay always do our live streams Saturdays at 7, usually if our bookings work out. So you guys are always welcome to come back on whenever.
Awesome, man. Thank you.
For sure. Yeah, we can be part of the Boglehead army.
Boglehead army.
You got to sell our individual stocks, man. I'm sorry.
Oh, okay. I'll have
next month, Fabio.
Anyway, thanks for coming on again, guys. Everybody have a good night, okay? Please go subscribe to their channel. I'll feel bad if none of you subscribe. All right. Bye.